Hi everyone, this is again about cash flow hedging, and I want to briefly discuss currency mix analysis. It shouldn't be really complex, it should be straightforward, high level with the solid data behind. Okay, first of all, list all the currencies you have. Just make the list. First step. Then pull up the factual data, fact, and make everything in one currency equivalent. Let's assume it's all in USD equivalent for the previous year, and cash in during the last year was the following: 1000 here, 100 here, 0 here, and it was something like, I don't know, let's make it 200 here, 500 here, and 200 here. What is it? It's cash out. Then listing the net position. It's basically our free cash flow, or operating cash flow, depending on the level of analysis. So here we have 800 minus 400 here, and minus 200 of United States dollars equivalent here. So in total we had 200 United States dollars equivalent cash in for the last year. The next step, helpful to analyze, is what would have happened if your functional currency was 10% weaker. So that means that here and here it's going to be different number. 800 for United States dollars, no changes. 440 for euros. 220, this is United States dollars equivalent, for Australian dollar. And in total you would have lower net cash in of 140. Is it big change? It is. It's about, I guess it's 30% difference here. Let's make it in red. So it's 30% difference. Yeah, it's 30. It's kind of, if you divide by 2, it's going to be 170. So it's 30% difference. It's big. So it's worth to consider. And it's also worth to decompose what has the major effect on this drop in cash inflows. And it's obviously here, euro, it's 40 and 20 out of change in Australian dollars. So the biggest part of analysis then should go to Euro USD and minor part to Australian dollar. You can play with this with current techniques, AI spreadsheets. It's really easy to have a range here between -10, -20, -30, or you can make it more granular. You can make it -1, -2% if your currencies mix are more stable. If currency is very volatile, it's worth to consider even bigger change than 20-30% and make this simple analysis as the first step in your strategy for hedging exercise.